CPI trade today. Let's take a look at the 24-hour session as well as the day trade session. And you can see CPI report came out, market surged. The CPI was hotter than expected. Market sold off, rallied back, made lows, tried to work towards the highs, went all over the place. So this is a 24-hour session. That's the NASDAQ. S&P similar, just wild back and forth price movements. And you can see the day session. Next, the day session only. This is a 24-hour session. The day session only right here. Just wild price action. This is the type of price action we're used to seeing on these type of days more and more now. The trades on the day were minus 492.50 hypothetical. We started intraday when it was down about 4,500, and we were up 41.50 on the day and live trading on the 250K portfolio, trading one E-mini and up $800, trading 2 micros on the 50K portfolio. The timing worked out well. We got in on that intraday drawdown that we targeted, and it was flat with the drawdown was $12,000, hypothetically about $12,500, and intraday around $4,500. And so you can see how we were able to get in on that $4,500 drawdown, be up $41.50, while the end of day results was minus 492.50. So we are ahead of the setup. The portfolio is still in a drawdown on a hypothetical basis. I'm going to show you that. And then we'll go over the trades on the day. Here is the portfolio calculator. We've been tracking this hypothetically. This is through yesterday. This does not include today's trade. Had a huge run up here. There were there's 1, 2, 3, 4, 5, 6, 7. We don't count that day because it was FOMC days. So there were 6 out of 7 days where it made new equity peaks. And now we've had 1, 2, 3, 4, 5, 6, 7 days. 3 days out of the last 7 have been winners. 4 out of the last 7 days have been, let's see, 1, 2, 3, 4, 5. Today will be the 5th day out of 8 days or 7 days that we 5th day out of 7 days that we've had a losing day with only just 2 winning days in the last 7 days. So let's take a look here. See the equity peak here on February the 3rd. And then you have this losing streak like this. These are the daily P&Ls. And then today that'll be minus 450. Here is what the portfolio calculator looks like. For the month, this will be about minus 100 on the month, right around break even on the month. So we have a cushion to work with. Here is the drawdown since the last equity peak. And so that's where we are live compared to hypotheticals by waiting for that drawdown. It's worked out for us in January, and so far it was a good entry for February to start the live trading, even though it's late in the month, relatively speaking, from when we typically start live trading. So sometimes it's tough to sit on your hands and wait, but an opportunity like this provides us with a good entry point, so it's worth waiting for, and we haven't missed anything really yet. So let's look at the trades on the day. The S&P mirror tried to go long right out of the gate and stopped out, and then the market rallied as soon as we were stopped out. And then as soon as we were stopped out on a long trade, we had a tick wave get short. It was stopped out on the rally back. Just this wild V reversal price action. Then it rallied to the high. Tick fader got short, called the top, near the top. Only thing that would have worked better here would have been a better profit target. Momentum reversal caught a little bit of the long side here on momentum reversal ES. So on these trades, there were 2 for 4, momentum reversal and tick fader. The counter trend trades were profitable, and the mirror was also a counter trend trade, just a lot of volatility. The open needed a bigger stop loss to stay with that trade. The short momentum lost on the day, and it's hard to think that the market, after all these rallies, it's hard to, you could easily draw the conclusion that the market loves inflation, but it doesn't. It doesn't love inflation. It's just continues to trade higher, aggressively trade higher, because it wants to go higher right now. That's what the liquidity wants. It assumes that the worst is over and that things will get better, and there's no real evidence of that. It just wants to be, it just wants to forward think in a bullish mindset, and so that's why the market continues to move higher. And so there might be a big price to pay if things don't turn out eventually bullish as anticipated. So Viper tried to go short on that. I thought that was a good short. Market was really supported down here at these levels, and then rallied back above 12,500. And then tick count trend took that long trade into the close, and then tick reversal 2023 hit another new equity peak. And then tick reversal, the older version had a losing trend on the long side, had a losing trend on the short side, but this one wasn't stopped out. It reversed to the long, and that was a profitable trade on the long side. Momentum reversal initially was stopped out. The first one was stopped out. The second one was profitable. Tick pulse was stopped out. So just a lot of wild price action today. The strategies in their rawest form actually did pretty well, only being down about $500 considering the price action today. We got in on a $4,500 drawdown, and it went down another between $2,000 and $3,000 after that. So I thought, wow, this, the last CPI it was minus 15K. So I thought, it'd be highly unlikely that we'll get 2 CPI days at minus 15K. And so the market, the turning point was when tick reversal got long, and then it started to surge here. So the market kind of calmed down right in here on this tick reversal strategy, and then it just tended to trade higher all day. A couple of pullbacks here. The market has deep pullbacks. It tends to roll over a lot. To me, it's as if the market's trying to sell off naturally, and they're also trying to drag it higher. And so there's just that back and forth tug of war between the bulls and the bears right now, and it'll be interesting to see who is right. We are flat at the end of the day, and we'll look forward to taking long and short trades tomorrow, keeping the automation on and running, working. We are at equity peaks in live trading since we started today, and we were already at equity peaks. And so we are trying to work towards hypothetical equity peaks as well. So it'd be nice to see that $8,000 run up to new equity peaks. And so those are the trades on the day for CPI, February the 14th, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.